MedPlus is the one that we're looking at. So Deven, just stay on. We have a call with the management now. MedPlus is on our radar because the company's board will be meeting tomorrow and they will likely consider some fundraising. Gangadi Madhukar Reddy, who is the managing director and CEO at MedPlus Health Services, joins us now. Mr. Reddy, always great speaking with you on the channel. Thanks for joining us. I know it's preemptive, but you have a board meeting tomorrow, so just wanted to understand that if you do decide to raise funds, what is the quantum that you're looking at? And in general, what would it be used for? Because you're a zero debt company, so there is, no debt reduction plans. Definitely for expansion is something that you're considering. So can you tell us a little bit about that?
Sure. Couple things. We're doing what we should have actually done at the AGM. We should have actually had an enabling resolution out there. So we just want to make sure that we have it ready. And if the markets hold, and given the fact that, our private label is doing fantastically, we expect to actually increase our margin, and that will actually enable us to grow much faster. I wanted to make sure that we were ready to raise money if the need so arises. That's all there is to it, honestly. I am obviously very, very positive about the prospects of the company, both on the pharmacy side, especially given the response to our private label, and also on the diagnostic side. So given both those conditions, if you really want to expand quickly, I think we'll need money. And for that reason, we said, let's put this paperwork in place and see how things actually pan out. That's all there is.
Sure. Just to follow up here, because we do know of your expansion plans. I mean, you added 150 stores in Q1 and you have plans to add more. And there's also the diagnostics business, right? But where will your focus lie? And in terms of expansion, what does the next 1 year or 12 to 18 months look like?
See, mainly on the pharmacy side. What we'll end up doing is basically growing at the same around 800 odd stores this year. But I want to, if everything works out, then I want to start building up the company for a much faster growth going forward. And that's the reason why we have that money. If I want to go into, let's say, new territories, we'll probably require money to set up warehouses, automate them and everything else and all. And whether I go in the franchisee mode or the regular store, either ways, we are going to require funds to actually start operations. I feel confident that everything is going very well. And I think, we could, if things pan out the way I think they will, be in line for much faster growth. And hence we said, okay, let's keep ourselves ready with some money. That's all.
All right, sir. Mr. Reddy, you're on target with regard to what you want to do in the near term, and you're looking to shore up some funds to keep pace with your goals. A couple of quick questions here. One is, what is the quantum of funds you could be looking to raise? And the second part is, how would it be? Would it be via, preference, warrants? You would have tested the markets, right?
Very preliminary, but it will be equity and it's going to be QIP. It's not going to be a rights or a preferred.
QIP, all right. And quantum?
To be decided, but we will take, permission from the board to go up to 1,200, but that's the amount we'll decide as we go forward.
Up to 1,200 crores.
Yeah.
Okay. Mr. Reddy, good morning. So this is going to be, when you talk about much faster scale up, I mean, will give you the option for a much faster scale up. Can be inorganic as well, or this will be all building up from the ground, all Greenfield?
All Greenfield. I really don't see us, buying anyone out there at all.
That's what I was wondering. But are there, the kind of sort of stores that you operate, are there ready-made kind of formats out there which you can acquire? I don't think so. Or are there?
Honestly not. And even if they are, the scale is actually far too less for us to really benefit us. If there's a player out there who's having 80 or 100 stores, really doesn't add too much to us, given the fact that we ourselves are capable of adding 100 a month.
So how many, put some numbers to it. If you decide to ramp up much faster compared to a historical store addition, what would faster mean? What would you go up to? Again, we're talking hypotheticals here, but some sort of numbers would help.
Okay. I would say at least double what we are. But I actually want to think about doing something more than what we're doing right now. We're just opening our own stores and all. We could possibly be looking at a franchisee kind of model and all that. And which means, setting up the brand, setting up the warehouses, setting up a large network, and getting in the people. And when you basically, let's say, go for a franchisee kind of model, you will end up actually investing ahead of time in the back end. And we want to be sure that we have the necessary resources for that.
A franchisee kind of model would actually also bring in some cash, right?
But yeah,
the investment required would be lesser as opposed to doing it yourself.
Agreed. But normally we would do one location at a time, and the amount invested in a warehouse and all that would be much less. But if you decide to actually go across the country or across a few more states, then you would do multiple warehouses and all. And that would be, spent upfront.
Mr. Reddy, one last question before we let you go on discounting, right? I mean, it's a common topic that we talk about, but I wanted to understand if there's been any tapering off of discounting. The last time I checked with you, you were still giving, I think, 20% discounts for purchases above 1,000 rupees, and a lot of online pharmacies giving over 25% as well. Has it cooled off a bit?
On the online side, more and more people today are trying to actually get closer to the 20. I don't see too much promotion at 25 and all. But what I see is a distinctly disturbing trend on the offline side. I'm seeing a lot of small players go out there and basically say 20%, 22, 25% also. And when we actually have gone and checked out the whole place, what we have seen is small retailers today to match our 20%, put that number out there, but then willy-nilly substitute the prescription for generic drugs, which they sell at full price, and hence they're making up that money. We're also seeing one more, I would say this, even if you could excuse it, there have been significant number of reports in the past few weeks about outright fake drugs in the market. Literally, they basically take the top 20, top 30 or top 50 drugs which are sold in the country. They're duplicating these, sending them through different kinds of services to places like Hyderabad, Bhubaneswar, Calcutta and all, and selling them as if they were basically just selling fake drugs, that's it. Wow. And that is what is propping up the discount for a lot of the small time, mom and pop kind of retailers. Otherwise, we can barely afford to give 20. I'm not sure how a really small store is actually even doing 20. And we have, done a little bit of investigation on our own part. And we've also seen a bunch of reports. We've been talking to drug authorities and all. This is on the rise, unfortunately.
Oh, no, that's a very important point you make, and it's important to put that out, right? That it's always better to stick to quality, because you don't know, you may get a higher discount, but the quality of the product that you're buying can be really spurious. But Mr. Reddy, we've run out of time. Thank you so much for joining us on the channel and speaking to CNBC-TV18. Appreciate your thoughts.